Hey guys, Ranveer here, your guide to all things finance and fitness. Today we're diving into the exciting world of sectoral mutual funds. Ever wished you could put your money into booming industries like tech or healthcare? Well, now you can. Sectoral funds let you do just that. They are like specialized tools in your investment kit, allowing you to tap into specific sectors of the market. Think of it like this. Instead of spreading your investment across the entire market, you're focusing on industries you believe will outperform the rest. This focused approach can potentially lead to higher returns. But remember, higher returns always come with higher risks. We'll delve into the details soon. Whether you're bullish on tech advancements or believe in the future of healthcare, there's a sectoral fund out there for you. Intrigued? Let's explore how these funds actually work. So, how do sectoral funds actually work? Imagine a basket filled with stocks from a single industry. That's essentially what a sectoral fund is. For instance, a technology sector fund would primarily hold stocks of leading tech companies. When these companies grow, so does the value of your investment in the fund. The beauty of sectoral funds is their laser focus. They allow you to capitalize on the growth potential of specific industries. Say you believe the renewable energy sector is set to boom. You could invest in a sectoral fund dedicated to this industry, riding the wave of its growth. However, it's crucial to remember that this focused approach also comes with its own set of risks. If the chosen sector faces a downturn, your investment could take a hit. That's why thorough research and understanding your risk appetite are crucial before diving into sectoral funds. Now, let's talk about some real-life examples. The Indian market is brimming with sectoral funds, each focusing on different industries. Two prominent names that consistently make headlines are the ICICI Prudential Technology Fund and the SBI Healthcare Opportunities Fund. The ICICI Prudential Technology Fund, as the name suggests, invests in leading technology companies in India. This fund has a proven track record, delivering impressive returns over the years. It's a great option for investors looking to ride the wave of India's burgeoning tech scene. On the other hand, the SBI Healthcare Opportunities Fund focuses on the ever-growing healthcare sector. With rising healthcare expenditure and increasing awareness, this sector presents immense growth potential. This fund invests in pharmaceutical companies, hospitals, and other healthcare providers, offering investors exposure to this lucrative market. These are just two examples, guys. There are numerous other sectoral funds out there, each catering to specific industries. The key is to find the one that aligns with your investment goals and risk tolerance. Section 4. The two sides of a coin. Benefits and risks of sectoral funds. Like any investment, sectoral funds come with their own set of advantages and disadvantages. It's crucial to understand both sides of the coin before taking the plunge. Let's start with the positives. Sectoral funds offer the potential for higher returns compared to diversified funds. This is because their concentrated approach allows them to capitalize on the growth of specific industries. If you're able to correctly predict which sectors will outperform, you stand to gain significantly. However, this high reward potential comes with its own set of risks. The most significant risk is the volatility associated with sectoral funds. Since they're heavily reliant on the performance of a single sector, any downturn in that sector can severely impact your investment. Moreover, picking the right sector at the right time can be tricky, even for seasoned investors. Remember guys, diversification is key in investing. While sectoral funds can be a great addition to your portfolio, it's crucial not to put all your eggs in one basket. Always diversify your investments across different asset classes to mitigate risk. Section 5. Navigating the sectoral maze. A beginner's guide. Choosing the right sectoral fund can seem daunting, especially for beginners. But don't worry, I'm here to guide you. Here are some practical tips to help you navigate the sectoral maze. Firstly, assess your risk tolerance. Sectoral funds are considered high-risk investments. If you're risk-averse, it's best to stick to more diversified funds. However, if you're comfortable with higher risk, sectoral funds could be a good fit for you. Next, research the sector thoroughly. Understand its growth potential, key players, and future outlook. Don't solely rely on past performance. Look at factors that could impact the sector's growth in the coming years. Once you've identified a promising sector, compare different funds within that category. Look at their historical performance, expense ratios, and fund managers' track record. Choose a fund that aligns with your investment goals and risk appetite. Remember, investing in sectoral funds requires careful planning and research. Don't jump in blindly based on hearsay or market hype. Make informed decisions based on your own research and risk tolerance. Section 6. Your reward awaits. Unlock financial freedom with beer biceps. That's it for our deep dive into sectoral funds. I hope you found this insightful and are now equipped to make informed investment decisions. Remember, knowledge is power, especially when it comes to your finances. As a reward for sticking with me till the end, I'm giving you a chance to win a whopping 21,000 rupees. That's right, you could be 21,000 rupees richer just by taking a screenshot of this video and sending it to me on WhatsApp. But that's not all. The first 100 people to send me a screenshot will also get access to 10 free financial calculators. These calculators will help you make smarter investment decisions and achieve your financial goals faster. So, what are you waiting for? Take a screenshot right now and send it to WhatsApp number to claim your reward. Don't miss out on this incredible opportunity to boost your financial journey. And remember, stay tuned to Beer Biceps for more such insightful content on finance, fitness, and everything in between.